Hey friends, in this video I'm going to be looking at an analogy that a TheChartGuys member recently made about scaling out of their positions. Let's look at what the message was and then we'll break it down a bit further. I now call my first 1/3 scale out my guardian. Its job is to protect me. I call my second scale out the harvester. Its job is to harvest profit at key levels. I call my final scale out Mr. Clear because bears need to give me a very clear reason to close it. So this trading analogy comes from a bit of a chain reaction. In the chat room, we had moderator Luke share a trade review video. Ralphio watched it and then came up with this analogy. Big shout out to both members who have significant contributions to the TheChartGuys community. So I love this analogy because it is my trading style, but it is worded in a way that's a nice clean analogy and it makes a whole bunch of sense. And I was actually doing this trade on Friday and I was doing it in the same way that this is described. So let's just use an example. Let's say I'm anticipating that SPY is going to form an hourly lower high. And I'm watching for signs on the 5-minute time frame that we're losing the 5-minute uptrend to indicate that hourly lower high is being set. So I scale in two positions, 500 shares, and then I see a clear resistance established. We set a 5-minute lower high. Maybe I buy another 500 shares, so 2 scale-ins. We confirm the 5-minute downtrend. Okay, hourly lower high is shaping up. I've got my position. I love scaling in and out of trades. It was a game changer for me in my trading style, and it really increased the win rate for me because when I lose, I stop out with a small loss or break even, and it does happen a good bit, but the winners far offset the losers in terms of risk versus reward. So let's say I've got my position now, and I'm looking to exit my position. So this is going back to the analogy. The first third of the position is the protector, the guardian, and this essentially ensures that I sell 333 shares of 1,000, and let's just say I sell it for a 20-cent gain. The break even on my remaining 2/3 position is now 10 cents lower. And so that ensures pretty much I'm now in the driver's seat of this trade. And if I'm wrong and the hourly lower high is not set or the bulls show up, then I am going to stop out break even or a tiny loss. So that essentially puts me in full control, lowers my cost basis, drops the position size down a little bit. Now, the trade starts following through a bit. Hourly consolidation is underway. Okay, I was right. Hourly lower high is set. Let's now say that my target to exit the second third of the position, which is called the harvester, let's say it's that's approaching hourly support. And I exit another 2/3 at this target, or I should say another third at this target, because of the potential that hourly support holds and we bounce and trade within a tightening range. And so essentially, okay, now I've locked in a second third of my position, sell another 333 shares. I cannot lose on this trade. It's just a question of how much profit am I going to make. The third position is called Mr. Clear. And that essentially requires that, all right, well, I'm only going to sell this position if the bulls prove to me that I should. And that essentially leaves the door open for the possibility, well, maybe we pull back more than I thought. And rather than holding hourly support and tightening up sideways, we break hourly support. And I still have a position for that. And it goes back to an example on Friday where I did this exact thing, looking for hourly consolidation, 5-minute lower high top fish, and I scaled out a good bit on the initial drop. And then the remaining position that I left, I said, I am not selling as long as we keep forming 5-minute lower highs. And I will stay with the downtrend as long as it remains. And that essentially lets the trend dictate when I'm going to exit. I don't have a target on that portion of the trade. I now let the trend dictate when that is going to be sold. And that again allows for a runner that could potentially see a solid amount more profit than I initially would have anticipated if the bears prove a significant amount of follow through. So thanks again, Ralphio. He's been going through everything, every video that I've ever made and time stamping things and organizing things in clear PowerPoints. It's been an awesome asset to the community and appreciate this analogy. It's a great one.